Hey everyone, this is Patrick from EasyFX Code Trading System, and this is Saturday, the 19th of August, 2023. And this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the fourth week of August. And as we look across these three majors, the Euro has broken below the lower trend line of the channel and has started to drift lower, while the cable has managed to recover and still holding above the lower channel trend line. And as we see, the Aussie dollar has still been weakening throughout and dipping lower and lower and finding support at the 64 round figure. And which means the US dollar is still recovering and climbing up higher against these major pairs, and it's only the sterling pairs that has been trying to hold their support and trying to fight for some foothold, while the other majors are still drifting lower. So let's take a look at what the main drivers were last week. And there was only one major one from the US, which was the retail sales figure, which triggered the fall basically for these two major pairs. And also take a look ahead for this coming week's fundamental news. Yeah, looking at last week's fundamental news, the RBA and the FOMC released their meeting minutes, with the major one coming from the Federal Reserve, with some discussion on still inflation risk and some upside on inflation, which still causing them concern, and possible more rate hikes in the future as well. Could be as soon as September, unless there's improvement in the data. And compared to that, with the UK, there's been some data that shows that the jobs has been still strong, with higher wage growth, and but unfortunately higher claims as well on the job front. So it's a mixed picture here, with higher wage growth, which could be a concern to their inflation figures. And then also retail sales figures fell lower than expected. And this is also a concern for the economy, but may temper and influence the Bank of England to hold interest rates, as it's not as strong as expected. So we'll see how this will play into their meeting next month. While for the Australian economy, the jobs is also weakening jobs picture. So that's why it's also pushing the Aussie dollar lower. But main driver last week for the US dollar was the retail sales figure, where it came out very strong, 0.7% versus a forecast of only 0.4%, and which was already fairly high expectation, but it surpassed that. So that really gave a boost to the US dollar. And this coming week, there's only a couple of major news with the flash PMIs from all the major economies. And culminating with the Friday and the weekend with the Jackson Hole Symposium, where there'll be a number of speeches from the central bankers as well. And that was where a year ago, Fed Chair Powell announced that they will still continue raising rates, and that really drove the US dollar higher then. That was a continuation of rate hikes from a year ago. Okay, so the rest of the week is still fairly quiet with no major news from the other economies. As we head into the following week, which will be the last week of the month, and preparing for this new coming month with non-farm payroll on the 1st of September. All right, so there'll be a lot of technical and chart movements for next week, and apart from the couple of news to watch out for. All right. So let's move back to the analysis. Let's start with the euro. And right from the start of the week, it had already fallen through the support of the lower channel trend line and fell hard on Monday. Pull back to retest the channel trend line on the Tuesday, and then continuation move for the rest of the week, drifting lower and lower, but trying to find support and trying to fight back, but drifting towards this swing low at the 108.33. That's going to be a significant support, and of course the major support below that at the 108 with the daily 200 EMA coming up. So this area of support, interim support, is now going to be interim resistance. And there is also an swing low support area, which will now turn into resistance, which will add to the resistance zone. And of course, at the 110, that's going to be a major resistance now. So if we just take a quick look on the 4-hour time frame, and that's what happened right from the start of the week. It dipped lower, and then on Tuesday continued lower with the stronger US retail sales figure, and was not able to hold support at the 109 and gave way. And it seems to be also drifting lower. And also let's take a look on the weekly time frame. And continuation move from the previous week, and still a strong bearish close, and pushing towards the 108 support. So that will be a key support zone. So it's moving towards this 108 support zone here with the daily 200. That's a critical support area. It has to hold, otherwise it opens up further weakness. So it could find support at 108 and then consolidate between the 108 and the 109. And there's no major news apart from the Eurozone flash PMIs, and of course the Jackson Hole Symposium, where there'll be a number of speeches and potential announcements as well. All right, so let's compare this with the US dollar index and see whether the US dollar has also been drifting up higher. Here's the US dollar index, where right from the start of the week, it already attempted to test the 103, pushed up in the follow through from the previous week, test 103, pull back to find support at the 62 fib, and then did manage to break through the daily 200 EMA and this apex of this triangle, where it managed to close above the 103 and finding support at this downtrend line and holding above the 50 fib retracement. So we'll see if there's solid foundation from the 103 to continue up higher. And the next resistance zone will be at the 21 fib at the 103.66 area. So this key resistance zone, let's move it up to the 21 fib now. And let's also mark the 104 as a key resistance and a intermediate resistance up here. The 21 fib, move this up to interim support at the daily 200 and around the 50 fib retracement, and the key support is at 102 along with the rising 55 EMA and the 786 fib retracement. Let's remove this one here. Okay, and let's take a quick look on the weekly time frame, and also a bullish close as compared to the inversely correlated euro pair, which are also a bearish close for the week. So really moving in a inverse fashion. So it needs to find support and build support from the 50-fib 102.86 and continue climb up towards the 103.66 area, 65 or 66 area for the next target. And we'll see if any of these news will provide any impetus for that. All right, it is also struggling to grind its way up, just like the euro is grinding its way down slowly. All right, let's move back to the other major pairs. Let's move on to the cable, where it has been finding support along the lower channel trend line and trying to hold on. So it's still finding support and climbing up above the 127 round figure. Let's see if it's able to climb and find its way back above this trend line. It needs to climb up towards the previous swing high at 128.48. And the next major resistance zone at the 129 round figure. So this area of support at the 127 and this previous trend line as well. The support, we can move it up to the 50-fib, where it has managed to form a double bottom and recovered from there. Let's take a look on the weekly time frame. And it closed as a spinning top for the week and potential consolidation, and it probably able to find support and climb up to test the trend line again. And it needs to recover back above this trend line to test the swing high, previous swing high. Now, if it gets rejected here at this swing high, that's could be a danger sign as well, with potential head and shoulders formation, which could drive it down lower. So let's see how the news affect the price action for the cable and the sterling pairs this week. But it needs to continue to hold above this interim support. All right. Let's move on to the Aussie dollar. Unfortunately, the Aussie dollar has continued to weaken and broke below this swing low on the Tuesday with the US retail sales figure, and did attempt to pull back and continued lower to hit the 162 fib extension of this smaller swing. Then close as a doji on Friday. And if this continues to weaken, and this extension could target the 200 pip extension here at 63, just above 63. And there's a whole confluence of support here at the 200 pip, the round figure of 63, and then the 138 pip extension of this reversal move, of this swing reversal move. So that's a major support zone. And if it does not find support from the 64, and if it does break down, then it needs to find support at 63. This is the next major support zone. So let's drop this one down to this area. Interim resistance now is going to be at a 65 and the 138 pip extension. Next major support now is major resistance now is at 66. Round figure, and where this swing low is. So very critical time for the Aussie dollar as it's continuing to weaken. And taking a look on the weekly time frame, it's still a very bearish candle close, and there could be further continuation move towards that support zone. So very critical time for the Aussie dollar. And we'll see if any of these upcoming news this week will have any impact to the US dollar, as there's no news from the Australian economy this week, so it needs to find a weaker US dollar in order to recover and bounce back up. Otherwise, if the US dollar continues to strengthen, then it spells further weakness for the Aussie dollar and its related pairs. All right, so do check out my other videos on spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.